Hello, friends. If your Social Security check is the primary way you cover your monthly expenses, this past week brought two pieces of official news that could directly reduce what you receive. And the first moves automatically under current law without a single additional vote from Congress. Here is what is at stake. The government's official annual report on Social Security's finances just moved the projected depletion date 1 quarter closer to today. Under current law, when that date arrives, an automatic cut of 22% applies to every Social Security check in America. On a monthly benefit of $1,500, that is $330 gone every single month. On $2,000, it is $440. On $2,500, it is $550. No vote, no warning, no phase-in. That is the math of current law. And Congress now has less than 7 years to act. At the same time, there is news that sounds like good news. Early projections show the 2027 cost of living adjustment could come in nearly double this year's. More money in January sounds like relief. But something that drove the most liked comment on Social Security videos this week is going unaddressed. Will that extra money actually reach your deposit? Or will Medicare Part B quietly absorb most of it before you ever see it? That question has a specific legal answer, and it depends on which group you fall into. Many people collecting benefits have a written protection in federal law they have never been told about. Others are in exception groups where that protection does not apply. Today's video covers 5 things from the official reports released this week. By the end, you will know what the 2032 deadline actually means and does not mean. You will know where the 2027 cost of living projections currently stand. And you will know whether the hold harmless provision, a rule in federal law for decades, protects your raise, or whether you fall into an exception where the rules work differently. That answer is in number 2. Quick context before the numbers. This video is for United States retirees and near retirees on Social Security and Medicare who want clear information about 2 official reports released this week. Everything here comes from publicly available sources. The Social Security Administration's annual Trustees Report, the Bureau of Labor Statistics, and the Senior Citizens League, a nonpartisan organization that has tracked cost of living adjustment calculations for decades, and I will name each source as we go. This is educational content only, not personalized financial or Medicare advice. And nothing here is a promise that you will receive any specific payment. Before any major decision, talk to a licensed professional who knows your individual circumstances. Subscribe now. And before number 5, when you first saw the 2032 headline this week, did your first thought tell you Social Security was being canceled? Drop a yes or no in the comments, because that answer is the most important corrective in today's video. Number 5. The Social Security Administration's 2026 Trustees Report was released on June 9th. It shows the OASI Trust Fund, Old Age and Survivors Insurance, the primary Social Security retirement fund, is projected to reach depletion in the 4th quarter of 2032. 1 quarter sooner than last year's estimate of the 1st quarter of 2033. Here is what depletion actually means. Social Security does not disappear. Working Americans continue paying payroll taxes into the system. The trustees' report says those taxes alone would cover approximately 78% of scheduled benefits at the point reserves run out. The remaining 22% currently comes from the reserves. When those reserves are gone, that 22% has no funding source under existing law unless Congress acts. Your benefit is fully secure today and through 2032. The American Academy of Actuaries noted within 24 hours that every additional year of delay makes the eventual correction more disruptive. Has a cost of living raise ever landed in your account and felt like it vanished? Leave that in the comments because it connects directly to number 2. Number 3. Why did the date move earlier this year? Legislation signed in 2025 reduced the income tax that some Social Security beneficiaries pay on their benefits. In the short term, that is real relief for those it covers, but it also reduced revenue flowing back into the fund. And the trustees' report identifies this as a direct contributor to the faster timeline. The Bipartisan Policy Center and the American Academy of Actuaries both stated that the window for gradual reform is narrowing, and that delayed action requires increasingly larger eventual changes. For anyone not yet claiming this adds one factor to an already complex decision: claiming earlier locks in a benefit level under current law. Waiting until 70 means higher monthly payments, but places more of your retirement income in a position that depends on Congress acting before 2032. Neither is right for everyone. Your health, other income, and your read of what the political environment will produce all matter. A licensed financial advisor can run the actual numbers for your situation. Number 1. The Social Security Administration announces the following year's cost of living adjustment each October. The formula uses the Consumer Price Index for urban wage earners called CPI-W, measured specifically during July, August, and September. The Bureau of Labor Statistics publishes this data monthly, and analysts track it so retirees can see the direction early. As of May 2026, the Bureau of Labor Statistics shows the CPI-W running at approximately 4.4% year over year, the highest reading in 3 years. The Senior Citizens League, a nonpartisan senior advocacy organization, is currently projecting the 2027 adjustment at approximately 3.8%. An independent analyst updated her estimate to 4.7% and noted the possibility of further movement as summer data arrives. Write this down. The official number comes in October from the Social Security Administration, based only on July through September data. These are early projections only. The 2026 adjustment was 2.8%, roughly $56 on an average monthly benefit of approximately $2,000. A 4.7% adjustment on that same benefit would add approximately $94 to $100, nearly double this year's increase. Number 4. Here are the trust fund numbers in real dollar terms. Based on the Social Security Administration Trustees Report, on a monthly benefit of approximately $1,500. A 22% reduction is roughly $330 gone every month. On approximately $2,000, roughly $440. On approximately $2,500, roughly $550 every month. Automatically for every recipient under the current projection, if Congress takes no action. AARP responded to the June 9th release by calling for immediate bipartisan action. The Bipartisan Policy Center stated that the longer the delay, the more disruptive the eventual solution will need to be. Consider Carol an illustrative composite. Carol is 71, a retired school secretary in Missouri, living on approximately $2,000 a month. When the 2032 headlines appeared, she called her daughter, convinced Social Security was shutting down. Then she heard the 2027 projections and felt brief relief. Until she remembered that last January, her cost of living letter arrived alongside her Medicare Part B notice, and the combined effect felt like no real gain at all. Carol does not know whether hold harmless applied to her last year. Number 2, answers that question directly. Number 2, here is the direct answer to the question driving comments on every Social Security video this week. Your cost of living adjustment and your Medicare Part B premium are set by 2 completely separate agencies on 2 completely separate schedules. The Social Security Administration announces COLA each October. The Centers for Medicare and Medicaid Services announces the Part B premium separately, typically in November, because both affect your deposit and arrive around the same time. A raise can appear to evaporate when Part B increases simultaneously. That feeling is not in your imagination. It reflects a real interaction between 2 independent government calculations. What the coverage this week is not explaining is that the Social Security Administration has a legal protection called the hold harmless provision. It has been written into federal law for decades. What it says? The dollar amount of your Medicare Part B premium increase in any given year cannot exceed the dollar amount of your cost of living adjustment. A Part B increase cannot reduce your net deposit below the prior year's amount. The Social Security Administration applies this automatically for most standard Part B enrollees. Specifically, anyone who has their premium deducted directly from their Social Security payment. Write these 3 exceptions down now. Hold harmless does not apply to new Medicare enrollees joining in that particular year. It does not apply to anyone paying the income-related monthly adjustment amount surcharge. And it does not apply to anyone enrolled in a Medicare savings program. If you fall into one of those groups, a licensed benefits counselor can explain how the rules apply to your specific situation. In 2026, The approximate $56 COLA gain exceeded the Medicare Part B increase for most standard enrollees. And the protection held. In 2027, a 3.8 to 4.7% adjustment creates a larger dollar buffer. But the 2027 Part B premium has not been set. The Centers for Medicare and Medicaid Services announces that in November. According to the Senior Citizens League, purchasing power still declined in real terms last year because energy and healthcare costs rose faster than the adjustment offset. More money in a higher adjustment year is real improvement. And knowing which legal category you fall into determines exactly how much of it reaches your January deposit. Watch for two announcements this fall. The cost of living announcement from the Social Security Administration in October, and the Medicare Part B premium from the Centers for Medicare and Medicaid Services in November. Here is the summary. Number 5, the OASI Trust Fund moves to the fourth quarter of 2032. Depletion does not end Social Security, but creates a 22% automatic shortfall under current law without congressional action. Number 4, at most benefit levels, that shortfall removes $300 to $550 monthly, with no additional vote required. Number 3, the timeline moved earlier, partly because 2025 legislation reduced fund revenue, claiming timing is a personal decision that benefits from professional guidance. Number 2, hold harmless protects most standard Part B enrollees from having their raise absorbed, but not new enrollees, income-related adjustment payers, or Medicare Savings Program participants. Number 1, Bureau of Labor Statistics data points toward a 2027 adjustment of 3.8 to 4.7%. The official announcement comes in October. 3, log in through the Social Security Administration website and confirm your current benefit amount and earnings record. 2, sign up for direct email updates from the Social Security Administration so you receive the October announcement the moment it is released. 1, before any decision about claiming Medicare or planning around 2032, talk to a licensed professional who can apply these numbers to your specific situation. If someone close to you depends on Social Security and has never heard of the hold harmless provision, please share this video with them today. The next video covers what Congress is realistically likely to do before 2032 and what each option means for your check. Subscribe now so you do not miss it.